As many of you know, for the last 2 years, I've been trying to build Richard Toad into a business. Obviously, it's been a lot of ups and downs, and I learned a lot along the way. Some were brand new lessons I didn't learn as a professional investor. Some are investing mental models that translated pretty well into building a business. So I want to take this opportunity to share the lessons with you. Maybe it can help some of you who want to explore the path of entrepreneurship. So let's dive right in. So first, let's talk about the lessons that are brand new to me that I didn't learn as a professional investor. You need to do everything when you're building a product and starting a business, even when you don't know how to. So how do you accomplish something where you don't know what you're doing? Well, figure it out. Who's going to help you? I learned JavaScript and HTML using ChatGPT. I learned Adobe Premiere and OBS to produce this video for you. And I learned how to use Canva, but more importantly, how to have artistic design thinking as somebody who studies statistics and business to create engaging Instagram posts and YouTube thumbnails. And many entrepreneurs will tell you running a business is like fighting fire. And I can relate so well to that today. Someday my Stripe payment system is not working. Some days, my clients will tell me my links are broken, and problems don't solve themselves. Every day is like fighting fire. If I don't do them, no progress will be made, and no one else will do it for me. But I am thankful I've had a diverse background, not just purely in high finance. In my prior corporate jobs, I did love rolling up my sleeve and diving into the details and getting things done. Unlike investing, you can't just get away by focusing on 2-3 things that matter. In operating a business, everything matters. Nonlinearity is also an inherent feature of entrepreneurship, which leads to my next point. So when you work at a corporate job, you are signing up for a predictable bi-weekly paycheck, but progress and money come non-linearly in the entrepreneurial world. Without content audience fit, your social media won't grow. It's not as straightforward as you think to be a creator because there's zero barrier to entry. Everybody can post something on Instagram, but only a few people can scale to a mega account. There's a reason the market is efficient, just like the stock market most of the time. Without product market fit, your business will generate no revenue. It's really simple. There are many fancy terms for these observations: tipping point, critical mass, escape velocity, and so on. When I first started, I was naive. At the time, my social media already took off, but I assumed my followership will translate into immediate financial success when I open up for business. When I first launched one-on-one coaching offerings, the harsh reality hit me. Despite the audience size, converting followers into paying customers, that was really challenging. One of the earlier lessons I learned is to not conflate distribution channels with revenue conversion. But there is a silver lining. At first, there were setbacks, but as I navigated the business building, it did become easier. Not because it always just does, but because I adapted. I listened to customers. I tried things. There's a lot of motivational stuff you can listen to or read. Tells you perseverance is very important in entrepreneurship. I can tell you it's true, but if you don't use your brain, you can persevere. You still won't go anywhere because you didn't make things happen. You didn't try to pivot until you get to the point of product market fit. And for internet-based businesses, inherently the critical mass and exponential growth mechanisms are built in. But getting to that tipping point is far from being taken for granted. It doesn't happen for most people. And from this moment on, I should still have no complacency because it will continue to be littered with challenges as I explore new revenue streams. But it's precisely these hurdles that define the entrepreneurial path. And part of that journey involves learning how to sell, which leads to my next point. I really learned how to sell. At first, I made the mistake of merely describing my offerings. Clients only care about how they benefit because we're naturally selfish. Even when I was a consumer, I care about what is of value to me instead of what the product entails. So it was an amateur mistake to be selfish by describing how great my products are when it needed a simple reframe of how much it benefits you. Because at the end of the day, if you don't take out your credit card, there is no transaction because I failed to convince you the value of what I provide. And that's 100% my responsibility. And also learn the importance of incorporating call to action, which as a social media person should have come pretty naturally. I've been pretty good with creating engaging content. I've gotten better to incorporate call to action that over time has yielded positive financial outcome for my business. Without having the so what, you just consume the content and move on. I needed you to do something. When I want you to do something, it benefits you as well because most of the time, I'm asking you to do something that doesn't require you to pay anything, but you will benefit by consuming more of my resources, which helps you in your journey to equity investing and equity research. Thankfully, there is synergy between being a social media creator and an entrepreneur, in that I already have a pretty fulfilling career as a self-marketer. This may seem cringy to some people, but it's very important to strive for visibility for myself in the social media realm when there's no barrier to entry, as previously discussed. But for those of you who are in corporate settings, visibility and self-promotion are absolutely essential in achieving success. You know what they say, it's not about what you do and what you know, it's about what others think you can do and know that matters. Some of the most important career decisions made on you were made when you were not in the room. So the perception is very important, and you are in charge of creating that perceptions in other people's mind. That's selling. And on that point, when you sell, you run into all sorts of characters as customers, which leads to my next point. Social media's emergence as a business concept, I think, is still in its infancy. There's a lot of skepticism because there's just a lot of online get-rich-quick schemes. So despite its transformational potential, there's a sketchy seller of courses that promise quick money, only for you to realize the only revenue they generate is from the sale of course itself. But if you look at Mr. Beast, Casey Neistat, Ali Abdaal, they are evidence that social media businesses are real. In their case, they're YouTubers. But it's real if you think about the business implication, which I will dive into when I talk about how equity investing mental models translate to business building. And like every other creator you follow, I've gotten my fair shares of haters and jealous people. They come in endless permutations. I suspect some of them are come from an angle of thinking social media revenue generation is easy, so they're jealous, without realizing it takes a lot of work consistently. So it's wildly competitive, takes effort and discipline to keep going when you're facing obstacles or when you don't want to do it. Not to mention, content audience fit should not be taken for granted. It takes trial and error and persistence, just like creating a product that your customer want to buy. In my case, I didn't grow my Instagram follower account at all in 2023, but I revitalized the growth through a rebrand and content theme pivot, which has been pretty successful. And personally, I dealt with a lot of people who try to discredit me. And I get it, some people like to associate credibility with years of work experience in the profession I'm trying to address. While I think this matters if I'm teaching portfolio management or idea generation. In fact, I'm giving away idea generation tips for free. You can check out the video on the upper right corner. This perception is completely wrong. I've known many PMs who are not great teachers, and yet many non-PM investors I've made friends with are some of the greatest mentors to me, one of whom was instrumental in encouraging me to pursue entrepreneur in the first place. So I will refrain from talking about my professional background because one, I'm anonymous, so I don't have to. Two, I will continue to let the content do the talking. Followers will come. And when your business model is B2C, we have to talk about the freeloaders. I know a sizable portion of my audience is in college who rather spend money on beers, but I recently had a talk with a big shot creator. He made me accept that freeloaders will always be around, and I should not obsess over them. He said, freeloaders are never going to be paying customers. Accept that and continue to use your platform to keep acquiring customers who do value your work. And I think that makes a lot of sense. One, it puts my mind at ease to not obsess and losing composure over people who don't matter. Two, I can reallocate that energy to doing something good using my platform. And that leads to my point about asking for help as an entrepreneur. I do a horrendous job on asking for help. I'm just lazy in going outside in person. Some of it is a holdover from my research background, where I'm wired to independently come up with a solution before asking for help. That doesn't work really well in entrepreneurship. While everybody's journey is unique, learning from other people's experiences can expedite progress or help avoid big mistakes. Fortunately, because of my current job search, I have been networking in person more and have encountered individuals who generously share their insights, which has helped me make many breakthroughs. So peer support is very important in a solitary path of entrepreneurship. But remember, while external advice is valuable, you know your business the most. Consultation and data gathering are helpful, but ultimately, you need to trust your instincts. Others do have a genuine intention to help, but they don't know the intricacies of your market, product, and vision. You should make the final decision. This one's really trivial. Just do it. As a startup business, your vision for the business will almost always diverge pretty significantly from what eventually it will be. You will need to pivot to make your business work. Overall planning is very futile. Experiment. Gather early feedback from customers. Adjust product design based on customer responses. For example, there are a lot of knowledge in my head, but none of you will value the disconnected knowledge as a product. So I started publishing things I think can help you. Over time, I started to see what articles do well. That's how I decided to go paid on investment fund deep dives, which you can read in the video description. I didn't know whether that will attract paid subscribers, but I know it's part of my knowledge I don't like to give away for free because it's very valuable and differentiated. And a year later, hundreds of you agree. So I know the product market fit is somewhere there. While some really big shot entrepreneurs have successfully evangelized a new problem and preached that their product are the solution you need to solve it, I think for most of us, it's better to identify an existing problem and solve it really well. So you need to avoid perfectionism and get your minimum viable product out there. Don't overthink on the strategy and the mode building at this point. Focus on making things happen and execute. The strategy and the modes, the business model, they're important, but they're meaningless if you don't have a product that customers want. So you don't have a mode to talk about. Frank Slootman, who was the CEO of Snowflake, he had this famous saying, strategy is earned by consistent execution. So for somebody who's big shot like that to say that, you should realize you gotta have the grit to make things happen at first. Then you will earn the right to strategize and start developing and competitive positioning in your industry. Businesses at scale is just a lot of processes. Being organized and establishing processes are very important for your success as a business operator and for reclaiming time to grow. So, the media loves to portray these instant wealth stories, right? Someone who works a few hours a week makes $500,000 a year. It's not a lie, but it ignored the upfront effort required to achieve such a lifestyle. Initially, you need to do things that don't scale to pave the way for scalable revenue streams. For example, career coaches, when you see them selling courses, that is not how most of them start. They typically start by selling one-on-one coaching first to understand recurring customer problems before transitioning to scalable recorded courses. Otherwise, no one will want to buy your course if you cannot address them in a systematic way. Thankfully, I have had enough corporate experience to design and automate processes, which benefited greatly my daily execution of repeatable tasks for my own business. Not everyone loves their job 100%, and that's okay. My advice will be, don't discredit what you do on a job today. Maybe you have product development skill as an engineer, or you have finance skill learned from inside a company or from Wall Street, or you have sales skills, or you have strategic insights because you're a product manager or a management consultant. I recommend you to be curious about what other people at your company do, because as a founder, regardless of whether you're going solo or having co-founders, you will need to be wearing multiple hats. In my case, as a solo entrepreneur, I wear so many hats. I don't even know what hats I'm wearing today. And you will never know what skills you learn today are invaluable in your entrepreneurial endeavor. Be open-minded about what you do today and have a positive attitude, because one, it helps you keep your current job, and two, they equip you with the skills that you might never know you will need when you're an entrepreneur. And up to this point, I have discussed the new skills I learned that are different from being a public equity investor. And now I'll dive into the lessons from public equity investing that are transferable to entrepreneurship. In both investing and operating a business, you gotta focus on what matters to maximize return on time. When you are researching a stock, every experienced investor will tell you to hone in on the 2-3 key drivers of the business. In the beginning, as an entrepreneur, I had to throw everything against the wall to see what sticks, i.e. finding the product market fit. The idea of focusing on the important things starts to matter over time because I have achieved product market fit a few times now. So now I'm more focused on reduction of tasks, not addition, by prioritizing activities that maintain my current revenue and drive future growth. These are the two things that matter to me now. For those of you who are my YouTube followers, you must have noticed I have not published a video for a long time. At this point, I am treating YouTube as a marketing channel. I really enjoy the creative process behind video production, but it is not repeatable by definition because it is a creative process. These videos are generating $1 of ad revenue for me per day, and those time are just better spent on revenue generating products products that can move the needle. It's the same reason why investors screen for stocks, because they want to reduce the opportunity set in hopes of identifying stocks that can be actionable at the time of screening. I recently came across this Jensen Huang talk where he advised the audience to focusing on solving a small problem really well rather than trying to solve a big problem but failing. I can relate to that very strongly today because as an investor, your most precious resource is time. And that's the same thing for an entrepreneur. You need to try your best to focus on things that really drive the results, which leads to the point of understanding business drivers. Stock analysts are skilled in conducting financial statement analysis and more importantly, dissecting drivers of businesses in different industries. So my experience in analyzing companies has helped me in strategizing for my own business. From the very start, I knew Richard Todd would not have as many followers as a general finance social media account. That's just the way it is. It's niche targeting. I know the game I signed up for. Thankfully, over time, I have personally come across and met online many full-time creators with smaller follower counts. I realized revenue size does not have to depend on a massive following. Value creation and capture per follower is the key business metric for me. That should have been obvious to me, just like how Wall Street was so fixated on Netflix's quarterly subscriber count without realizing they have transitioned into an average revenue per subscriber story. That insight would not have come to me as quickly if it weren't for my investing background. And the investor skill set will continue to be very useful as I eventually venture into the phase of establishing moats. At this point though, the focus is to continue to build more products with product market fit, not on finalizing revenue models and establishing moats, which leads to my next point on building for the long term. I have been a long-term quality value investor, and that translates very well as a founder. Everybody knows price is what you pay and value is what you get. But the application definitely goes beyond the public equity market. It applies to the labor market and it also applies to general commerce, which is what a business is all about. As an investor, I don't care for the short-term price fluctuations. I'm focusing on the intrinsic value of the business. And similarly, as a founder, I am relentlessly focusing on enhancing the value proposition of my products, my value add to the community and the value of the brand, rather than focusing on generating near-term cash flow. I admire founders who have achieved success through sheer determination and operational excellence in price-based competition in commodity industry, but I will always prefer to engage in value-based competition. The conventional wisdom is for aspiring entrepreneurs to start as a side hustle while you keep your full-time job. The rationale is really clear. When you have a steady income from a corporate job, you will less likely succumb to the pressure of generating short-term cash flow for lifestyle purposes and instead focusing on value creation and brand building. Because of my personal situation, I did not go with that route. There were definitely times I was close to succumbing to the temptation of near-term cash flow that did not align with my brand's ethos. For example, getting solicited for low-quality advertising deals. Thankfully, I ultimately walked away after careful consideration because I care about my brand too much. So you look on the internet, there's a lot of get-rich-quick schemes, there's a lot of short-term profit maximization tactics. So I understand the audience's skepticism of online businesses. But the paradox is, I think it actually makes it easier for me to differentiate online by focusing on demonstrating tangible value. It's similar to how a quality business will consistently generate high return on capital because the operators prioritize long-term decision making and sacrificing short-term gains. Certainly, me having skin in the game in my own business helps a lot, which you have seen in examples in Elon Musk, Jeff Bezos, and Jensen Huang, owner-operators on some of the most valuable businesses in the world. Ultimately, the ability to capture value is contingent on your ability to create value. So as the owner-operator, my focus remains fixated on creating value in more ways, knowing that value capture should follow over time if I get the business model right. Many rich people will tell you it's impossible to build a very valuable business without learning how to delegate and automate, i.e. gaining leverage on others. But understanding the concept of leverage was at first a very big adjustment for me as a business operator, which I should have realized if I just think about the analogy of return on capital. Last year, I was more willing to spend money to buy back time so I can have more time to build more products, which has clearly driven tangible financial results for my business coming into this year. So I'm doing more of that this year. For example, I hired a contractor to perform an administrative task, and it has been a wonderful experience to work with him to get time back to focus on higher value activities for myself. I anticipate expanding the scope of work with my contractor as I delegate more tasks. Seeing the time I can reclaim, I have been much more willing to spend money in software to shorten tasks such as YouTube video production or client onboarding. It's small money that generates big revenue. It doesn't really matter in the grand scheme of things. Not to mention, a lot of these productivity investments are fixed costs that I can gain leverage on a bigger revenue base over time. This point should be trivial that entrepreneurship and equity investing are both risk-taking, and they both involve navigating uncertainty and dealing with imperfect information. Obviously, investors are no stranger to being wrong in a probabilistic profession. Even the most successful investors are often very humble because they have been humbled by the market, and they scenario plan for outcomes, which are highly transferable to entrepreneurship. Entrepreneurship hinges on the ability to embrace uncertainty and dealing with imperfect information. When you launch an MVP, you don't have a very strong idea on how the market, i.e. the customers, will respond. Investors understand the value creation only comes when they act on their views via buying and selling of the security. Otherwise, you create no value if you have a lot of right views, but you never acted on them. In both cases, you don't know whether you're right or wrong until after the fact, but you are obligated to act. That's risk-taking. You cannot rely on theoretical framework. You have to act on it, and you have to be willing to adjust based on feedback. Maybe that's why Nike's "Just do it" slogan is such a powerful one. For investors, which I'm really guilty of, the wrong approach is to read all the books, hedge fund letters, all the case studies without ever analyzing a stock and acting on them. For entrepreneurs, no amount of books on entrepreneurship, leadership, sales can replace doing it, learning from mistakes, and adapting. And that's all I have. Comment below your entrepreneurial lessons, or if you see other similarities between stock investing and business building. I'd love to hear your perspective and get a conversation going. If you want to hear more of my take on the investment management industry, I have 2 great videos for you in the upcoming screen.